And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, July 28th, 2022. Well, we continued higher again today, and we initially moved lower on the opening. And right off of session lows, they came in, they bought, and they continued to buy, and they pushed for the balance of the day. In fact, ended at the highs. And we've had a lot of things putting into today. We've had more digestion from the rate hike and et cetera, and GDP showing that, that we're sliding for a second month. And does that mean we're in a recession? Should it be, et cetera. Conversation has been all over the map, but yet the buyers have flocked into the NASDAQ, the Dow, the Russell, the S&P, just back into equities. And so we went above 12,600, 12,700, 12,800, and 12,900. And so we will be opening about 6 minutes in Globex. And right now, it is showing that likely from right where it is, but I doubt it'll sit there. We'll bounce all over. We're looking to open about 12,903, according to this little bit a minute. Now, what is all of this, and how does it affect, and what's really going on? So I have been, I had two major interpretations of the decline off of the high at 15,268. And one being that it was minor waves 1, 2, and 3. And the other was that it was minor wave 1. And that would suggest that this was a minor wave 2 correction, countertrend correction. And initially, as we were approaching some different things in June, and how this all started, there was a lot of play. There was a lot of possible that it was a triangle, which would have pushed it into the 4 spot. But when that broke and it turned into it continued to be an ABC, it left it as an ABC for a minor wave 4, but it continued to just bark and go higher and higher. And so that brought back this particular view, this alternate. And so it was the second of the two that I was running side by side, parallel, and I continue to run parallel. Now, if indeed this is it, and I am going to leave this up for just a bit, and this is a minor wave 2, let's take a look at what the potential is in terms of just Fibonacci retracements. So I'm going to go in and update this real quick. And this is actually 5298, 5268. Let's fix that. 5268. Actually, it's actually almost 69. We'll give it the benefit and give it the tick. Okay. So wave 2, the most common for wave 2 is that it's going to come in 50 to 62% of wave 1. So that tells us 13,168 to 13,664. And I laid this out before and thought, wow, that's pretty high in terms of what I'm expecting to come next. But guess what? Even under this, what would come next would be still a crushing slide lower. So again, whether this ends up being the ending for that intermediate C, and then a primary A, and this is somehow working out to be somewhere in between of what I think a primary B wave would start and look like, then what we got going on is still likely to take us up into these levels and possibly higher if it's that primary B wave, but to get started somewhere up into these levels and then turn and decline. This is the turn would be much more severe. Now, how I try to relate that into current, right now, everything seems to be wanting to turn itself around to push prices higher. And so everything now is being interpreted like, whew, you're done with that. Even like, for example, today, Amazon reported they again lost $2 billion instead of the 6 point whatever it was. But they've had strides and made money in the web services division and in sales. So the balance out was like, oh, okay, so you're all through with all of that. And as soon as this recession, inflation stuff gets taken care of, you're going to be blowing the doors off. So we're going to take the stock up. And they did. And currently trading $138, closed at 122. So it's up pretty high. And then came Apple. And Apple, same deal, you know, kind of like balance stuff out and everything looks great. And we love you, Apple, and you're the best and the best. So the stock is up $5. So put that all together, you got where we are, and suddenly we're going to open unchanged. Now it's 1924 was just there. Now they're going to try to mark it down a little bit. Whatever they're going to do, they're going to do. But I think we now have room to this 13,000 is a part of the whole move from the 2003 low up to the 2021 high, 2021 high. So that's where that is. So that's not really in play right now. So our next stop, once we start getting past all this, is we got, let me see how far we got. We have 12,963 to 73, and then 13,000. And then the real next Fibs resistance comes in at 13,168. So we can keep going. And they'll do it under thin conditions. Now, let me just also put in Elliott. And this you can check and you can look up on, Google it. And that is characteristics for an Elliott second wave. And the characteristics are really going to show you that second waves are also very deceiving, because after a strong enough decline, the market players are believing that was it, we're done. And now we begin to rally again, and it gets pushed to levels that finally the sellers get one more chance to sell. You know, they can start the next selling because it's up in levels where they will step back in and they will begin to move what they need. And we're headed right in that direction. And on top of it, because we're really, when I also sit down and I take a look and I think to myself, what seriously has changed? Other than the banter and the pundits now talking up, well, everything's priced in. We got it all priced in. You know, they made money. Oh, so they lost money. They'll be back. They'll be back. Next quarter, we'll get it. So buy it now. So again, and then they'll toss out, well, you know, the stock market's always just looking ahead. We're looking ahead next 6 months. That's what we're trading now. The next 6 months. It's like, really? Well, how can you tell me the next 6 months are going to be rosy and wonderful? Because that's then making an assumption that inflation and a recession, all a hoax, not happening, will go away, will evaporate. We're doing great. Look at our stocks, look at our companies. We're doing great. It's like, okay. So in any case, right now, I am going to work this particular alternate. So I've shifted back, and this is the one that I'm going to leave on the chart. So how do we factor in again? 1, 2, 3, 4. Here comes the 5. And so it's a tough call, but I am going to allow this 4 to overlap that and keep this channel line going. And you can see the upper channel line kind of intersects. If I go 1 to 3 or A to you can't, I got to go 1 to 3 and 2 to 4. So you can put your channel lines in, and it likely we're getting up here. I believe now that we are pretty cleanly going to break above 13,000, I would believe, and likely try to get comfortable up there. You can see that the S&P is very close to 4,100. And that is what I would suspect. Eventually, the NASDAQ, believe it or not, is the laggard in all of this. They continue to power the S&P. And pretty much Amazon and Apple are powering the S&P right now along with Microsoft. But for some reason, we got a couple other things. We got Intel, and that's actually in the Dow, and it's also in the S&P. So again, how it's all balancing out and why they're insisting on continuing the push, well, we'll find out. But in any case, here we need to continue to allow. So it's wave 5 that remains, wave 5 of C that remains in force. I'm going to drop down to the hourly chart, and let's take a look inside this last little blurb, because there was the 4, and then 1, 2, 3, 4, and then the 5 is crazy. 1, 2, 3, 4, maybe one more. So again, now we've got all the big earnings are out. We still have some that are coming later. We still have Uber. We still have NVIDIA. We still have Intel reported today, AMD. But the big titans, not that they're not, because they're huge companies as well. And, you know, Apple was saying that macro issues aren't hurting iPhone business as earnings top expectations. So, and that's a good thing to say. It's not hurting iPhone sales, except now we're going to go into another quarter where money is more expensive and phone companies aren't going to be willing to just kind of give you an iPhone and you just pay them back. I think a lot of things will be changing. But in any case, we'll see. Right now, for tomorrow, I believe it's expiration, which means we've got a lot of adjusting to do. Apple up 5 pushes a lot of things into focus. Amazon up 16 brings a lot of things into focus. It's a huge move in Amazon. It's like Amazon going up 160. So I'm more than that. Excuse me. That's like Amazon. Let me just do the math. 16 times 20. It's like Amazon going up $320 on earnings. So it should be a bigger push. Okay. Allow for that bigger push. When it is complete, whether it happens tomorrow, whether it happens next week, and whether we get to 13,100, whether we get to 13,600, when this turn comes, I believe it will be quick, it will be swift, and it will be, in my opinion, news driven. It has to be a shock to the market to turn it and get everyone to rip and go south, sell everything they've just been buying and setting up. So it's been a very intense week. Let's see how it goes out tomorrow. Now, please also remember that, again, I am not taking a bullish or bearish bias here, that because I am a day trader, and so I trade price action. And what tells me are moving averages, and also I use market profile and intraday. And so by doing that, I am really kind of putting together a picture where I'm following the supply and demand. And so yesterday and today, the demand has been from the buy side. The demand has been to buy everything. So that's what, of course, then changes that value area, because eventually sellers are done there. They'll sell some here. They sell enough, they're done. They'll sell some, it keeps moving up because the buyers continuing to push. And whatever reason you want to attach to it does not make any difference. It is happening, and this is one way of tracking it, because there are points of control: value area high, value area low, Fibonacci, Elliott. There are so many means to which we can determine and put parameters around a move on various time frames, that we don't need to take a bullish or a bearish posture, and therefore be always trying to tie in why is Amazon going up? Why is Apple going up? Why in the face of recession and inflation and higher interest rates? Because you're looking for an answer that likely you'll get 1,000 different reasons. And so you'll get 1,000 different versions. but it hits home, and this is to deal with money, and people are desperate to go long and start making money again because it's been going down for so long, right? No. In any case, stay tuned. I think that when we break, this is on the hourly chart, and look at, I got every last one of these things pointing up. We are up and still cresting. So eventually it's all going to catch on and we're going to go. I go up to the daily, and we take a look at the moving averages on the daily. We have the 200 EMA up above at 13,580. And then we have the 200 SMA above at 14,163. So here's our upside. We have, likely just because it is the big number, 13,000. I'm sure there are going to be stops both ways on that level. And then we have Fibonacci-wise 13,165. Then comes 13,580. That's the 200. 13,664. That's 618. That's where wave 2 would equal 0.618 of wave 1. And then above that, we have 7.5 at 14,029. And then we have the 200 SMA at 14,160. So can it get there? I don't know. We'll see how hard they intend to push, how much they need to cover. Don't forget, a lot of this is short covering. And that likely will continue, and that'll just continue to force it higher. So you got the ones that are going to jump in because it is going up. You got the ones that got to buy because they already sold it down below. And you've just got to squeeze. It's just going to go. So I am not convinced that it's anything other than still corrective. The wave pattern itself continues to adhere. This is classic 5 waves. This is classic ABC in my mind, in my book. So I still do not see a triangle pattern. So I can't really discuss that it's a diagonal, a leading diagonal at that, to form either a wave A or a wave 1. So I don't see that. And so I am going to continue that this C wave now, yes, I was looking for a minor 5 to complete it, but if indeed this is a minor 2 and we're going to go down, we're looking much, much lower. And it truly pushes the completion point for the intermediate wave C and the completion point for the primary wave A much lower, puts it down closer to the 2020 lows. And we'll get into that at some other point, but it just opens the door for this unbelievable catastrophe that can't happen actually rolling in and happening. And that's called a recession. And that's just called repricing. And it's just called interest rates adjusting. And it's called getting a grip on everything. Plus, who knows what other hotspot around our globe kicks in and happens. We're already seeing other countries. We just saw the European Union jump interest rates up really high to get a grab on their inflation. We're going to see the Bank of England stepping in. We're going to see the Bank of Japan, the Chinese central bank. They're all going to have to deal with their own internal stuff. And right now, so are we. And it's not going to go away simply because the stock market's going up. That's not how it works. So, yep, we can continue to go up, and yep, we can continue to trade it. So that's where I'm going to leave all of this. Tomorrow, I am looking that we might get a little pickup in volatility, and it'll go both ways in all seriousness. So we can get some strong and some strong up. Follow your moving averages, follow points of control, follow your value areas that will truly help you choose and stay in the market and be able to play both sides. Next update will be on Sunday, July the 31st.